This session's being recorded. Today is the 18th of January, 2016. This is Clueless 8 Frank. This is an advanced coaching session webinar for group session members and members of the Clueless 8 Club, but primarily for group session members. Anybody who's getting comped is basically getting comped. Let me see here. Okay, we'll kick off. I'll do a quick roll call so everyone's on the same page. I have Always Learning.
Yep, hello.
Excellent, excellent. I have Corey.
Here.
Excellent. I have Dale Riker.
Here.
Okay, great, Dale. I have Fish Eyes.
Loud and clear.
Okay, I have Kerry.
Here.
Excellent. I have Savvy.
Yes, sir.
Okay, great. Thank you. Thanks for attending. All right, Sunday evening. Session's being recorded. This will obviously be accessible to it'll be accessible to you guys on the Clueless 8 channel as it normally is. All right, let's anybody who's joining in, just I'm keeping an eye, but just feel free to just type in that you just joined in. So I have a tab here. It's important. All right, guys. Let's dive in. We are without a single doubt in anyone's mind. Forget about me. Oh, there's Jay Pester. Yeah, no problem, Jay. Jeremy. As long as you can hear me. So, we're going through one of the most volatile periods in recent memory. Here is what I think in a nutshell, and I look at charts like even when you guys are not even thinking of charts. Okay. I think something's going wrong with me because I dreamt of, I had a high yield dream. I don't know what the hell that is. It's just really bizarre. Okay. And I'm certainly not that nerdy. People who know me, and some people who know me personally, know I'm far from a nerd, honestly speaking. Okay. As far as you can get. But why was that dreaming of high yield CDS rates going up and down? I mean, there's something bizarre going on. Okay. So obviously, so the bottom line is, on a short-term basis, we are on a bottoming process. Not a single doubt in my mind. Not a single doubt in my mind. Now, I'll show you some comparables, but comparables don't matter in a event-driven situation where every single data point that's out there is rocking the markets back and forth. So we'll talk a little bit about strategy tonight. So if people who are trading the market, I know, some of you are quite actively, and I commend everyone for that. I will suggest a few strategies which are actually working, and not just on the short side. I'm talking, long short type of straddle strategies on the market. So let's talk a little bit about what exactly is causing this. We all know it's China. We all know, they're talking about recession. My thought is, and I looked into this, pretty deeply, and I have a couple of years under my belt, and I kind of love this boring crap. The U.S. economy is far from a recession. All right, no question about my mind. Anybody who's out there saying we're going to go into recession is sitting out in Oregon and smoking a fat one. Okay, no question about it. We're not going into a recession. Are we going to be in a recession 6 months from now if things really slow down and there's a dramatic fallout on the consumer spending side, which is the most critical factor, as we all know? Yes, then we can. If everybody gets that, scared and terrified that they don't want to go out there and make that extra discretionary purchase or luxury purchase or whatever the case you may be, then yes, we are going to fall into a recession. But by the time these economists tell us we're in a recession, and you guys might have heard the term, the recessions are normally over. It's just the way it is. Okay, you got to feel it yourself that we are in a recessionary period, and you are the best marker to understand that. So my gut feeling tells me that we are not. Okay, we are going through a very large adjustment process globally that is primarily driven by a complicated set of currency adjustments that the average person or even the so-called intelligent investor or trader cannot understand, because there are layers and layers of currency derivatives that are in play starting off, whether offshore one, onshore one, and this and that. And it's a great learning experience because all of you, one with other, have educated yourself far more in the past couple of months. And I will take some credit in saying, in being in our group, which we focus a little bit on education too, not just random, oh, I made 2 points here, I made 3 points here. Those are dime a dozen. We've done a lot of those, even in this type of market. Just go ask Mr. Burrito what we did. The day I posted the chart, after that, the stock went up 70 points. It's a fact. You know, just because I don't go out there and shove that on people's faces every 2 minutes and have screaming headlines every time somebody, I mean, screaming banners every time somebody enters my website saying, whoa, look at this, 500% in the midst of a market global slowdown, doesn't mean that it's not happening. Those things are happening. But let's get back to the issue at hand here. So the point is that that when you have these, and then we, of course, how could we forget that? Then we have oil. So there are people out there, a lot of them, you know, like, oh, oil's going to 20, oil's going to 15. Look, oil's in a bottoming process here. There's a monumental stuff that happened this weekend. And I want to get into the politics of it. I'm going to get into the economics of it so you guys understand it a little bit and sound very intelligent when you're talking to the next person. How about that? Okay. So for that itself is I'm worth $500 a month. How about that? All right. So Iran, you opened up the doors. How big an impact is that? It's huge. Is Iran that stupid? That they're going to, believe me, they're a lot smarter than Saudi Arabians. I'll tell you that. Okay. I'll tell you, look at the history of Iran. We used to be best buddies with them, okay, before the mullahs took over. And the same people who ran that country when the Shah of Iran used to run, you know, and girls were running around in Chanel miniskirts, okay? And they still do, except they wear a sheet over it right now. Trust me when I tell you, okay? So the point is that the same people who ran that country, hardcore businessmen who understand America better than anything because they all studied here, are the same people still there. So don't fool yourself. They are not. I'll tell you this right now. Aside from the hardcore group of mullahs and their Iran Revolutionary Guards and stuff, who are like serious, like, you know, about like fundamentalist type, the rest of the business class in Iran don't give a you know what. They just want to make money. That's why Saudi Arabia and the Gulf states are so scared. Because the pivot of big money, and you're talking big money. Anybody who's visited that part of the world, that's big money. We're like a bunch of hobos, you know, out of the Bowery in Manhattan at 4 a.m, begging for pennies. There's big money there. Even at oil at $30 and $25. Okay? So they're scared that the pivot of capital is going to of business is going to move over to the Gulf, I mean to the Iranian side. It's not going to happen in one day. So when your economic security is threatened, you want to fight it. So bottom line is there's going to be a middle ground. So this Iran thing, Iran's not stupid. Okay, they're not going to dump 1 million barrels of oil into the open market. They said they're going to do 500,000. They're probably not. I don't want to get into it too much, but they are probably going to. Hey, Craig. They're probably going to do. They're going to start off with 200,000 barrels a day because here, think about this for a minute here. Iran's hurting too with low oil prices. Just because they weren't selling oil to us doesn't mean they weren't selling oil to the Canadians and the Europeans and the Chinese. They're selling oil to them right, left, and center. Except they couldn't freely do it, right? Now with the sanctions out, they can do it. So they're not going to flood the market and push oil down to $10. I mean, that's like not just suicidal, that's the height of stupidity. And that's going to drown their economy into, you know, against what they're trying to achieve, which is economic stability. Okay? So bottom line is that while I'm talking the first couple of minutes, I'm just going to switch around the time frames on this on the e-minis. So the bottom line is that that's huge. So is oil all of a sudden have an emotional dip? Absolutely. But that emotional dip is, look what happened. Right when the sanctions were lifted, the Saudi stock market fell 7%. So what I'm saying is happening in billions of dollars out there. Why is the Saudi market falling 7%? Because the sanctions are out. Because they're scared. They're scared that their economic power is being weakened by another regional giant who's rising from a business standpoint. I'm keeping the political stuff aside. Trust me, they're both a bunch of goons, okay? But that's life. You got to live with goons. That's nobody's perfect. So you think the Chinese are not goons? I mean, I'm talking governments here, not people, please. So no one, take it the wrong way. So the point is that that's stabilization is coming in oil right now. When they realize that oil is not going to completely fall apart and the Iranians are not going to pump 1 million barrels into the open market every single day and push oil down to $15 a barrel, $20 a barrel, it's not going to happen. The second, so anyway, so that's a big, this is serious global game theory going on here. Okay. In the meantime, the Iranians are actually starting to appease the Saudis a little bit. The Saudis got really pissed off when they burned their embassy, obviously. So they arrested those guys and said, hey, they're bad guys. Those guys did it, this and that. So they're trying to not inflame the situation in the Middle East, which is good for everyone. So the bottom line is that we got the key factor, psychological factor that's running in the market right now is China. Now, a couple of things happened over the weekend, and I was, monitoring it. I posted a couple of very important and key articles, which were very interesting. I don't know if you knew, but our futures were up 20 at one point. They're up to 1900. No, S&P futures. Not that it really matters to me anymore. It really doesn't matter. Futures are down 50 points at the open, or whether it's up 50 points at the open. Honestly speaking, I think then we're going to talk about strategy a little bit. It really doesn't matter anymore. It really doesn't matter. Because if somebody says, oh, futures are down 50 points and then we're going to be down another 100, I'm sorry, it doesn't work like that. It just doesn't. So, yeah, maybe it works 1 day and 2 days, but don't make that, like that old saying goes, when it gets too easy, just leave the table. So just nothing gets, if just consistent shorting becomes so easy that every time the market's up, you short and you make 3 times your money and you walk away from the table, and you telling me that that's going to be the norm, I think I've been in the market long enough and traded long enough and lost long enough to know that that's not the case. Just the way it is, and we have seen that sometimes, in the middle of nowhere, from a technical standpoint, boom, comes a big, reversal candle, then market rushes up 300 points. Next morning you wake up, which I did warn very clearly. People know that this ain't the bottom. They're going to retest the lows. Well, a lot of it did. They retest the lows. They jumped up a little bit and retested another low. Perfect. So that was posted on Thursday very clearly. Okay, so good stuff. Now, so now we have a huge series of data that's coming out that's going to cause futures to go up 10 and down 20 and all kinds of stuff. So what's the fun? It's like, watching Willy Coyote, right? Or whatever crazy cartoons they have these days. So because the Chinese series of data are going to be released. People who want to know a little bit more, it's all there on the Twitter website that I put out there. Chinese GDP tonight. Read that article. Talks about what's coming out and a whole bunch of stuff. And a whole bunch of stuff's coming out. In reality, it doesn't matter. And let me tell you why. And this is where the behavioral aspect of investing and finance comes in. What does it really matter if the Chinese number comes at 6%? Or whether it comes at 7.5%. The bottom line is China's going through a massive readjustment, and they are taking steps to calm the foreign markets down by, I don't want to get into the mechanism too much, but they're using a mechanism of reserve ratios to calm down their difference between the onshore one and the offshore one. In other words, so that shorters can short the crap out of their yuan on the other side, devalue it, which pressures their actual value of the currency. And you know what happens on our side every time the currency, devalues. Like, oh my God, the world is ending. You hear every single guy come out of the woodwork and basically tell us that we're just finished. In reality, it's actually benefits the U.S. big time, because the fact is that despite the drop in the yuan, and it only dropped just so you know facts, since the beginning of the year, it's only dropped 1.4%. But the way you listen to these guys, it sounds like it's dropped about like 10% or something. Oh, since the beginning of the year, really, it's dropped less than 2%. But it was sudden, so that's the reason why the markets got jolted. The fact is that the U.S. dollar on a corresponding basis hasn't shot up. I don't know if any of you ever look at the U.S. dollar index, which I think you should. It's still stuck below 100. It's DXY. So why is that important? Because a stronger dollar doesn't do anything good for us, right? The stronger dollar has taken away trillions of dollars in profit from currency translations in 2015. So somebody who doesn't understand at all might ask, why? Well, quite simple. If your dollar is strong, then foreigners can buy less of your goods. So let's say, example, you're selling pot. How about that, okay? So you're selling whatever, Oregon Red, or I don't know. I don't do pot, so I don't know all the strains and all these names. So the point is, and you're selling it to, let's say, Hong Kong, which, by the way, they smoke a lot of pot there. So the point is that it's going to cost them more to buy that good from you. So now let's go on a serious topic. Price of, big advanced machinery and medical equipment, for example, costs a lot more if the US dollar is strong and their currencies are weaker. That's the reason why emerging markets and the South and markets overseas countries overseas don't want their currencies to be weak, because it costs them so much more to do business with us. And it hurts us because the less they buy from us, it cuts into our profits. Multinationals. Period. It's as simple as that. Or large US multinationals like the Boeings of the world and the IBMs of the world, you name it, tons of them, Honeywell, GE, all of them, by the way, are lined up big time to do business with Iran. Big time. America's about business, not about fundamentalism. We don't like extremism. I don't. I'm sure a lot of you don't either. So the point is, it's about business. Let business do. Business is the ultimate equalizer. Coca-Cola. Good old Coke, right? The drink version, not the snorty version. So the point is that American business is gold. They're the ultimate equalizer. They go, they do business. That's it. So whether it be Iran, whether it be somebody else, American business will selectively go and do a lot of business with them and rake in profits. So the point is, that that's why. So that's a dollar thing. So the dollar really hasn't gone berserk. Now, let's talk a little bit about what's going on the short-term front. So a couple of trade strategies. If somebody thinks that they can just buy something and look at it 2 months from now, well, I got news for you. I know what you're all thinking, what I'm going to say. They're going to be right. And they're going to make a crap load of money. Or even a couple of weeks from now. If you could shut off your machines and you bought a chunk of stuff Friday or in the upcoming days, there's going to be volatility, and you bought a chunk of stuff and said, that's it. I don't feel like trading every day and looking at this garbage. I'm going to revisit this a month from now. Or I'm going to revisit this on Valentine's Day. How about that? Mid-February. You think the market's going to crash before Valentine's Day? I don't think so. And you know I've been right on that every single time. You're going to make a lot of money because the market will have a bounce. Whether it twists and turns around here and this and that, it's going to bounce to predetermined levels regardless of China, regardless of Iran, regardless of anything out there. Markets have predetermined levels if they want to go to. And you all have seen it more than I have, I'm sure, at many times. I don't know if you might have been not observing it, but I certainly observe it. That markets do. It doesn't matter if the news is bad, good, or ugly. They just do what they want to do. And that's just the way how markets work. And as human beings, we refuse to acknowledge that. We think this time is different. What's different this time? Well, the bulls will give me a long-winded story, and hardcore bulls, and the hardcore bears will give me the same old crap. The Fed failed. They don't know what they're doing. Blah 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 blah. I'm really tired of listening to all that stuff. Because personally speaking, I don't give a hoot about the Fed. But anyway, and when I hear idiots come on the media and traders on stock twits and stuff who have become specialists in global finance by using one word, the Fed sucks. They don't know what they're doing. That should be a great PhD thesis for Princeton, economics. The Fed sucks and they don't know what they're doing. It's just, and then you hear those screaming rants from Santelli and all these people. And I agree with many of the things he says, by the way, but it just makes me laugh. But let me laugh in my own space, right? But let me just get straight to the point, guys. Central bankers don't control the levers on everything. You have to have monetary policy that comes out of them controlling the interest rates and all that stuff. And you have fiscal policy, which has to come from the government. The government doesn't do crap, whether it be Republicans or Democrats, to be honest with you. Okay, so what? The Fed's supposed to lift the whole world out of its state of imbalance? Nope. But people don't want to hear that. So that's how it goes, all right? So I don't want to get into that right now. Let's get into the markets. So let's say we are not rocket scientists. So if we're not rocket scientists, then let's look at things real simple. These are big time bottoms. You think this wasn't a panic? Come on. You think this wasn't a panic? I do this for a living. I know how people, what the screams and the yells and the same comments back and forth. Nothing wrong with that. Nothing wrong with that. Same thing. Okay? So these are significant bottoms. So what we're looking for are retracement bounces. That's it. After that, if we are truly going to go into a short-term bear market, let it be. But just keeping it very, very simple. So much money can be made just by using simplicity. Yet traders sit there on their butts and do nothing. And forget about investors. I mean, they're frozen in some Arctic in a compartment and they don't want to even come out. So goodbye. So the point is that when people say, oh, this is just panic selling. Well, it's actually not panic selling. It's pure robotic selling. It's hedge funds, sovereign wealth funds, which are funds run by individual countries, as you all know, are going through some capitulative institutional margin selling because they have a lot of things that are connected to currency derivatives and oil. So when oil repeatedly keeps on doing what it's doing, what do you think? They don't get margin calls? You think these flushes that we get every single time, that's mom and pop selling? No. US mutual fund selling already happened. It happened at the end of the year. They're panicked. I mean, hedge funds, the real cowboys in the business, those are the guys who are, who are doing some selling and the buying part. But it's machines who are the algo high frequency trading machines are the ones which are exasperating the situation both on the upside and downside. So a couple of things that I look at very simplistically, and people who have actually listened to my stuff and among listening to, I'm sure definitely listen to other people and other views. That's how great traders are made. We have traders in our group who follow me sometimes and then look at my charts and go the other way, and they're doing well. And I go tactical long and short too, as much as I can. And some traders, no names included, have done tremendously well over the last couple of 2 weeks or so. And I congratulate them, because my motto is very simple here. You got to use me as a tool, not as a prophet. So when Corey calls me, and I have to point this out, that Moses, lead us to the promised land, I take it as an insult. Don't do that stuff, because all you're going to do is you're going to get whipped in the chat room. I'm telling you right now, because those are the worst things traders can do. Say, you know all, I'm just following you. Yeah, you're kidding, obviously, so I know that. But still, don't do that, because it psychologically damages you and other people too, because they think, well, if this guy is saying this and it doesn't happen like that, then something's really wrong. No. Use me as a very intelligent instrument on your dashboard. Okay? And if you use that and you listen to other people, I know you guys all do, then it's going to be fantastic. I don't even use myself as oh, that's it, I know it all. I'm just looking at things. I'm looking for clues, no pun intended. I'm looking to match the macroeconomic backdrop with what's happening on the front side and that stuff. All right. So just want to be clear on that. And again, it's not here to sort of offend anyone. So that's not my business. Yeah, I get tough sometimes in the chat room. I have to. If you're running a service, you'd be too. All right. You got that's just the way it is. It's part of the education process that we are going through, and part of the motivation process when I try to get people moved up a little bit. Wake up time. Wake up time. So the good thing is that the standard deviation this drop here, I believe I've repeated many times, it's around 9. Well, I'm happy to announce that this is close to 9. I would say it's a 8.9. How about that? Negative 8.9. So for now, we're good to go, meaning have a retracement bounce. These machines will do exactly what they did last time. If you study this chart very closely, so in other words, the standard deviation for some of you who are not aware of it is very simple, is if you look at these moving averages, and I'm concentrating on the red one, which is the 50-day moving average, the orange one, which I think is here. Where is it? Bear with me. The 50-34, I know that's the 5. Hold on one second. Bear with me. Where's my 34? Somebody changed the colors. Normally in orange. There you go. And where is the 5? Nope, the 5 should be in here. Bear with me one second. These are very, very important markers, so I need to have these in place. Okay, now we're talking business. So if you're using the 50 and the 34 as sort of the highways that the market travels in, you can see the massive volatility deviations from those moving averages, right? So the standard deviation, the bigger it is, you get a reversion to the mean. You go try to test. I'm not saying it happens all the time, but you go back and try to test one of these lines. If you notice here, this was the Fed fake out that afternoon on the 17th of September, the reversal tail, huge. It was a rejection of the 34-day moving average. Now, this replicates itself in all time frames. primarily in the 1 hour, in the 4 hour charts, in the 30 minutes, and use any moving averages you'd like. I just use this because it works for me, and I'm used to it. So so to keep in mind, real simple, we got a big standard deviation here. I mean, this is a 90-degree fall because there was a massive flash crash. I'd call this a good 80-degree fall, right? This is almost slanted 80 degrees. This is 90 degrees straight down. So good enough for me for now. So what's the next level of interest? The next level of interest, in a very simple way, if you don't want to get too canny, is 1980. Said this before. So you're talking about around 1980 to 1990. Now, in different charts, it's going to look differently. In some charts, it's going to look at 2000, but who really cares? Because at this point in time, if you can get a bounce of 100 points, I think you should wrap up for the first 6 months and say, I'm a genius. Not me. I mean, you should tell yourself. I said, that's it. I nailed it. I raised the first 100-point S&P. This is the first time I've done it in my life. Awesome. I'm a genius. Sit back. Then you'll have other scraps to play with. Swing trades at this point will be very choppy, but they are going to work. Day trades will drive you nuts. I still do it. You have to do it if you really want to be engaged. It's like daily training, right? So the point is that if somebody thinks that immediately we are going to basically collapse and go further down, of course there's a possibility, but it's a low probability in my opinion. However, these levels are important. On the E-mini, on the S&P 5, this is S&P 500. Below 1850, things start to get really tricky. It can happen. It can happen. So we'll look at that too, where we can possibly go, that if we break this 1850 level and create it. But in the short term, this is the level of interest, 1950 on the S&P. That's 70 points. Do you know what 70 points is on S&P calls or SPY calls? That's almost 600% on your money. And if this doesn't wake you up, all of you up, then I don't know what will. We're not talking about 6% on your money. We're talking 400-500% on your money. Now, for that, you have to have real risk capital, which brings me to my next point. This market is all about risk here. This market will be all about risk all year. How about that? So like my dad used to say, and God bless their soul, he's passed away years ago. It still goes through my head. If you think life is hard, then everything's going to be pretty goddamn easy. Okay? And that is, trading is hard. If you're ready for it, you're going to enjoy it. You're going to love the thrill of attacking the market long and short and doing what's necessary. You don't enjoy it, don't do it. Because it's going to fry your brain in levels that you don't want to be fried. Okay? I'm warning people, like people who are new. Trading is not for everybody. It is not for everybody. There are times in the past couple of weeks I want to rip my hair out. I don't have much hair. Well, I do have some hair. How about that? Okay, I don't have Donald Trump's hair. I'm just kidding. But the thing is that I'm telling you guys, it was frustrating. It was nerve-wracking. But I rely on technicals. And things fall into place. And then you get some nice hits. Because it's not just one thing I'm showing. It's multiple, suggestions that I'm putting out there. So the point is that as a trader, from a mental standpoint, that great piece, and there are so many out there that I put out there from Dr. Steenbab, that's his name, right? Phenomenal. You really want to be a trader? Then be a trader. Don't be a wuss. Honestly, you don't want to be a trader. Be a trader. Don't be like, oh, yeah, I'm waiting for that thing. Look, I know I kid around, but it's true. There are no perfect moments in this business. Futures are up 550 right now. Whoopee. By the time the Chinese data comes out, we'll be down 30. By the time tomorrow morning we open up, we'll probably be down 20, and the day will end up 200. So all of this And what I try to do through my charts and my technicals and all that stuff is put some rationality as to why these things happen. Each of these candles, which by the way I'm going to look through now, just from pure physical visual pattern symmetry, are worth hundreds of points. So what I'm getting at is very simple here. I'm no genius, but I do know one thing. I control my fear. And I'm not talking about this, anything in life. And if you're fearful of life, do not be a trader. I'm telling you that right now. If you think everything in life is one scary thing, there are people who get one parking ticket and one speeding ticket. They think their life's over. God bless them. Thank God those are not the people who are fighting and dying for us, trying to save our country in faraway lands. Because then all the ISIS had to do was put a speeding ticket on top of a Sherman tank, right? M15 tank or whatever. I mean, serious. I get really bothered when traders act like sheep. I'm serious. I'm dead serious, guys. Because I like everybody who's in my group, everybody who comes and goes. Many have. You gotta think determined. And you gotta act. And you know why I say that? Because I have fundamentally made the same mistakes. And sometimes I'm forced to make the same mistakes, even now, in smaller bits. And I hate it when I do that. So why not share it with the Clueless Day Trading members? Not acting on something when you know it's got a high probability move or a non-high probability move. It shows there. And it's just the worst feeling in the world. So for God's sakes, the only thing I'm begging all of you is that if you want to be a trader, these are the times. These are the times, okay? Whether it be up here up here or down here or these volatility clusters, which we're going to talk about in the next minute. It's the day you gotta test your move. I don't care if you do it with $100, but you gotta be in the game. Paper trading is the worst thing anyone can do. Burn $100. You do it anyway by going to a stupid game or going to a bad restaurant or buying some bad wine or doing whatever stupid stuff. So do it in something that will help you be a better person by creating wealth for your families and for yourself and making you feel like you actually are somewhat intelligent when it comes to not just trading, but investments and the markets. Look, the markets used to scare me. The markets don't scare me anymore. What's going to scare me about the market? That it's going to be down 1,000 points? Seen it. It's going to be down 200 at the open? Seen it. How many times have we seen it? We've seen it like 9 times in a day. I'm just exaggerating, but we've seen it a couple of times in a day. So what's really so scary? You know what's scary? When you have a big chunk in one position and that goes flat down. That's scary. But what to do? But when it comes to markets, so what's the lesson from that? Don't have big chunks in one position. Simple. Because in this type of volatility-driven market, small gets big. I don't need to tell you that. You see the numbers out there every day. So my point is that you have to engage. And as a trader, if you do not engage and you think, oh, I'm just going to keep on watching from the sidelines when things stabilize, I have news for you. Things are never going to stabilize. This is the new normal. You think I'm bullshitting? You think I get passionate like this because I like hearing myself like this? I hate my voice. It's because I'm trying to tell you guys, ladies and gentlemen, wake up. Seriously. And many of you are. I'm just talking about in general. Stop waiting for that. Oh, where's the bottom? It's a rolling bottom. And then it's going to go up. And before you realize that's a bottom, guess what? It's going to retest the bottom and it's going to crap down. And it could be from here. It could be from retesting the 34 at this level. But by that time, oh, that was the bottom. Let me get into the market. Well, guess what? See you later. Because that will be a retest and bang. And you'd be like, oh man, this oh man of this sighing. You know what? You got to banish that from your mental vocabulary. You have to do it. Otherwise, just don't do this. Just don't look at the screens. All right. So I hope that's loud and clear with everyone. All right. So bottom line is that at this point, looking at which brings me to it. Because of the volatility driven markets that we're going through, and we shall be going through forever. How about that? You think there's going to be a calm period in the market? Yeah, the only calm period in the market will be when the markets are not moving 100 points up and down. People are going to say, oh, that was calm. We didn't have a 100-point up and down market. But aside from that, we're going through a bottoming process. And we could slip and slide. We could go a little bit lower, but we're almost there. But you got to be quick. A couple of trade strategies. I would not, even though I think the swing works well, I would not leave any large positions overnight because it's so random now with stuff going on from overseas that I have a hard time keeping large positions overnight, even though it could be very lucrative, very lucrative. Let's say you have 10 contracts of S&P call and we open up 20 to 30 S&P points higher, which, big move. This happened a couple of days. All of a sudden, you're more than double. You're like, whoa, I'm golden. Well, guess what? What if it doesn't, right? Opens lower. Then you got to, you don't have any cash on the side then to add to the other side and all that stuff. So you don't want to go through that. You always have to have cash on the side to attack that. Number two, fast moving volatility trades. So don't carry large overnight positions. I said don't, but I'm just giving you suggestions. Okay. Bottom line is that, intraday. Instead of playing options always on a lot of stocks, and you know what they're doing these days. I've noticed this. The option makers are totally screwing around with option codes, big time. The spreads are so wide, you're like disgusting, right? You try to buy Regeneron, the spread's like $3 in the middle. Like, what's going on here? The stock's moving. So I would suggest, if you have a day trading account, which everyone should strive to have, to be honest with you, then just buy 100 shares. If you have 100 shares of these big moving stock and you get 7 points, on each move, you're making 3,000 for that day. So think simple. Buy 50 shares because on a fast moving stock, it moves up $14. Google 100 shares, bang, up $20. That's $2,000 in your pocket without you having to figure out where you're going to sell that call. Oh my God, that spread. And by the time you try to sell it, they smash you down because the option guys are serious criminals, in my opinion, especially at the Chicago Board of Options Exchange. Have you seen their faces? This is the kind of guys that, they're a bunch of bandits. If you have daughters, you don't want your daughters to hang out with those guys. I'll tell you that right now. Okay? They're horrible. And then during times of massive stress, what Thinkorswim and these guys can't even figure out the codes. And it's just horrific. You get on the phone with them, like, what does it matter? You ever hear the guys who answer the calls in Thinkorswim? They all sound like they're some sort of like, they're from Brooklyn. They're all like Chicago ex-mobsters. Yeah, what do you want? What's going on? Oh, you got a problem here? All right, let me look into this. Like, shut up. So seriously. So, instead of just doing pure calls and stuff, do 10 shares, 20 shares, smaller accounts, 100 shares. Don't, on a crazy stock, don't go above 500 shares, even if you have the ability. Because they'll swipe you the other way, you get stopped out, and then then it'll go the other way, right? We know that. So whichever way, just use some common. I've been doing that and it works well. It also gives you a little bit of mental stability because you don't have to watch those options so closely. Now, on the cheaper options, like the Netflixes and the Apples and Amazon, sometimes it's cheap. Tesla, sometimes it's cheap. Then it's okay. But options above, let's say, $8, $10, $12, right? they don't seem to have the same type of comparable move unless the stock really moves. AKA, can somebody fill in the blank what type of stock that is? That we did very successfully last week. It starts with a P. It's called Priceline. Okay. Another one that starts with a C. It's called Chipotle, CMG. So those are specific movements on that side. And then there are people here, Pester included, who shorted Priceline off the top. And so as a trader, you don't need to always have to be long. You can go long short. And at the same time, you don't always have to be long short. You can just say, listen, I know market is volatile. I missed the long side of the trade. I'm going to short it from the top. Now, the only reason, just so you all understand, why I'm not really going actively shorting individual stocks per se, but doing it via the S&Ps, the SPXs and the SPYs and such, and the UVXY as my short hedges, is because I have gone through situations years ago where in this similar type of massive market move, thousands of points in days, I got burned because I went in too hard, too short, trying to think, okay, this is a technical, bam, So I don't want other people to suffer through it. I'm sorry, because it doesn't matter how fast I am in reporting, in posting my trade alerts and stuff, you won't be able to react. When the market just does that hammer candle and then starts running, and you're short on that side, you just get blown out. So do it at your own thing. But I'm just saying, there's a time so you can do it both sides, whichever the way. I just use my instruments that I use, and they work fine. So that's just passing it on to you guys. All right. But on stocks, I've shown both the short side and the long side, and so you can use that to your benefit. Because people who are even though many of you have been with me for a while, you have to realize, use my charts to make your own decisions. Don't always wait for my trades per se. So use my charts, and some of you have done it very effectively by looking at it and saying, okay, showing this, but I think it's going to come there first down before it moves there, so they short, and it works. So use that too, because my chart is a visual representation of what's going on. So you'll have to, so use it both ways and apply it. All right. And when you do something on your own without getting assistance or suggestions or guidance from this side, from Clueless Day Trading side, psychologically, it's the biggest boost you'll ever have. That's the way it goes, especially when you make real money off that trade. All right. So let me get out of this here. Let's take a look at the weekly. So on the weekly, I find these Darvas boxes to be extremely helpful. Very simply because it takes my little headache away from drawing the lines, to be honest with you. So here's your Darvas. Here's your Bollinger's acceleration bands. Here's your October 14th lows of 2014. Seems like years ago. Which is 1823. Can we go to 1823? Absolutely. We can do that in 5 seconds. That's 60 points from here, right? 60 S&P points. That's another roughly 360 points. Nowadays we get 360 points like, every 2 seconds. So this is one level. These are very defined, by the way, because they're all run by machines. So they're all very defined. So here. So keep that on your mark, 1820. It's certainly in the radar. Then you have some major triple support here that the market is attempting to bounce off right there. And before I move further, as my good friend Savvy pointed out, which I always say, when do you think markets generally bottom? Around the 15th of the month. October 13, give or take a couple of days. This was the 24th. That was an aberration, the flash crash. This was the 28th. And every single time that you look at this stuff, you will see roughly the middle of the month. It's a technical reason too, but whatever the case may be. So is it possible that we have a short-term bottom in place? Yes, I think it is. So looking at that, we have a short. Let's use this. Let's use these boxes. Let's not think. Let's not think. Okay. So if we're not thinking, and we see this box here, this green. This is the Darvas box right there. And by the way, there are guys who are who are the big wave theorists. Those guys are like rocket scientists. 90%, I would say a good 80% of the time they're dead wrong, but they'll convince you that they're right. And one of them called for all kinds of stuff. I mean, these are Elliott wave guys. They're out there. I've only a few brain cells left in my head. I don't want to burn them learning wave theory. I understand it pretty damn well, the 5-wave theory and all that stuff, okay, and the subdivisions and everything. But I purposely don't go into that because that's a little bit like out there. Whichever the case, they'll tell you a different story. Some are bearish, some are bullish, mostly bearish. So anyway, so if you look at this Davos box here, this is the box, this is the upper box, and this is the lower box, right? So what's the upper box? The upper box is 1952. So if we do 1952, there's still 70 points from here. Hey, look, maybe I'm a simple guy, but 70 S&P points for me is like a godsend if you play it right. All right. That can free me up to buy a little bit extra food, pay back some debts, and get the dogs to eat something aside from dry chicken bones. I'm just kidding. So the point is that that's a lot of what's 70 S&P points? 70 S&P points is roughly 450 or so, 420 to 450 Dow points. So if somebody came to you with a stock, and this I want to remind everyone. Like I give such powerful trades on these S&P trades, especially. And if you want to play it clean, just play the SPX and the SPYs. Because individual stock risk is going to come into play big time. Why? Because it's earnings season. So market could be up a gazillion point. I think Netflix is on Tuesday, tomorrow. Definitely going to be in there. And I'll lay out the trade. And the bottom line is that you could be up 300 points and the stock could be down like 5%. Short term. So I'd rather play the clean market and concentrate on stocks too, obviously. But I'm just letting you know. So let me ask you a question. So a lot of the times I come in there and I put these, and I have charts all documented. I'm putting together a little team so that I can have these people really market my stuff because it's such powerful stuff. I'm dead serious. Like those options charts that I put out there, and they actually go from 8 to 60. And 8 to 40, and 8 to 30, and 8 to 20. So if somebody came to you and said, listen, I have an $8 stock here that's going to go to 20 in the next 48 hours, you'd be doing cartwheels. So think about the indices and these options trades on the S&P 500 exactly the same way. I thought about this a couple of weeks ago. Like, if people don't seem to have the same type of excitement when an S&P call or a put goes up 200-300%. But if somebody comes to you, and believe me, I was in the wealth management side for a lot of years, okay? And the best brokers in the world, and I certainly wasn't the slimiest one, that's for sure. These guys, they knew nothing about the companies. And they say, oh, Charlie, you're going to get 100% on this one. So the point is, why don't you look at these options indices, recalibrate your brain? That's one of the mottos for 2016. Why don't you look at these things as stocks? Stocks which you can put some stop losses on, manage it, dollar cost average down if necessary. And for people who are really doing these, want to try these things out, do one. Otherwise, don't be here. Don't waste your time on Sunday evening. I mean, it's a what is it? Sunday, a Monday evening. Seriously, listen to me. Go on and on. Gotta be in the game. Otherwise, just so many other things to do in life. Okay, please. So so here we have the hourly chart. So even if we go up and test this, that's 1916. What I like about it is we're below 1900. That excites me because anything above 1900 is money. Even if it goes to 1900, I propose buying some little small bits of the SPX calls, right? The 1880s and stuff. Yeah, they're a little bit pricey. So what? Buy one. Don't have to go to buy 10. Buy two. Buy one. Can't buy a half. Somebody should do this time sharing thing on options. How about that, huh? Hey, I got this option pool going. The option costs $40 because it's deep in the money. So I'm going to time share with you. You want to come in? But I'm kidding. Obviously, you can't do that stuff. So the point is, even 20 points higher, you're going to get literally 20 points on that $30 call. Or if you bought a little bit out of the money, let's say it's 10, you're going to get incremental moves. So that's exciting. So so this one, it's self-explanatory what's going on here. These things, I harp on it, so I don't want to keep on going at it. We're pretty deep oversold conditions. What I did notice, and this showed up on, I'll show you on the other chart. There's some sort of weird positive divergence going into play, which are pretty big. Now, here is another thing. Keep in mind for the S&P 500, for the general market. Okay. This was the lows of September 2013, right there, September 2013. This was another major low where we got to McClellan minus 207. Hands down, technically speaking, buying opportunities on a swing basis. Remember, I'm not going to be held hostage to my forecast because something didn't work out in 15 minutes, which tends to happen here and there. Well, I don't really care, to be honest with you. So the point is, if you look at this here, every single time there was a pretty sharp move up. And these are pretty sharp moves up, each of these candle type of things. 50 to 60 S&P points. So you're looking at 300 to 400 Dow points. And we can get that in a moment's notice. So given the fact that we're down here, again, this is on a weekly basis, we should expect to see a powerful move up. Same thing showing up on the stochastics. It's not rocket science. Just look at it yourself. This was that October 15th low. It's actually started to turn October 15th, similar to here. This was October of 2014. That was a huge move, huge. And if you remember my earlier sessions, I know fish eyes and some of you remember, this was monumental buying opportunity, just the way it was here. By the way, on September, when the market crashed down here, I can assure you that I didn't hear too many people, including in our group, forget about the others, who actually said this reversal candle needs to be respected. And I didn't think the market was going to go up. The market went up 2,000 points. Just the way the market fell 2,000 points here, the market went up almost 1,700 points, Dow points. And I'll tell you, and I mean it, more than 90% of traders completely missed that trade. And we were in there in bits and pieces because I didn't expect it to move like that. It just shot through, took out the thing. Now, I look at things differently, all right? Right or wrong. That's maybe why I named it Clueless 8, all right? Because I'm not as smart as those very smart guys out there. And so if you look at it simplistically, ladies and gentlemen, I always harp on this simple observations. Here we had a 2,000 point plus drop. We have had corrections in sectors more than 25%. I'm not talking about oil. Oil sector is down more than 50%. I'm talking biotechs and cases. I'm talking this, that. There are many sectors which are down huge. And why haven't we completely broken on the moving averages? Can anyone see this? These moving averages are still like, oh yeah, it's a walk in the park. It's another, garden variety correction. Everybody's freaking out. The world's ending. The Chinese are going to shoot themselves. It's something going on here. And what's going on is, and I've said this before and I'll stick by it, there is no real generalized panic in the overall credit markets, but in specific areas of the high yield market, there's panic because of oil. Okay? So this, and use your own brain. I'm just giving you a couple of pointers so that you can use your own brain. This 50 and the 34-day moving averages are still meandering. They should be plummeting. Because every day when we walk in, it's like, whoa, 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 don't shoot, it's, don't shoot, please. Can't buy anything, they're going to shoot, oh my God. So in that case, why didn't these plummet? I'm asking a question to myself, I'm not asking you guys. This should be, these moving averages should be, this yellow line is a 5-day moving average, right? So it's a 5-week moving average. Understood. That certainly, came down. Obviously that came down. I mean, look at this. But the actual moving averages, they're starting to crack. But they should be, in my opinion, cracking more. Does that mean that everything's rosy? No. But it also suggests very clearly in my stupid head that a lot of this was financial engineering or technical readjustments and hedge fund blowups, and not an economic Armageddon. I hope you guys understood what I said. All right? This is not an economic global fallout. Recession, oh my God, So that's my opinion. Could be dead wrong. I'm just showing you what I see right now, what's in front of us. Because when we dropped here and we had this big flash crash, these lines didn't even cross. They just kept on going their merry way. That told me right there that we were going to definitively have a volatility move and a retest of the lows, which is mandatory. You always have to retest the lows. But things weren't completely cracking. Here, we did have a minor crossover of the 34 and the 50 because of, because we know why. But nothing to really say, holy cow, running into the panic room. All right, let's see. Now, so that's one other thing. Stochastics and stuff, you guys know what the hell's going on. Now let's take a look at E-minis, what they're doing. Interesting. This is real time. We're up 8.5 points right now. Always the number 8. NASDAQ was down more than 8%, or the S&P was down more than 8%. Is there a significance of number 8? Yeah, I think there is. So here we have we certainly are starting to see the first signs of a minor bottom. First level of resistance is going to be 1910 on the E-minis. Next level of resistance is going to engagement with the downward sloping 5-day moving average at 1951. Whoopee, we get to 1951. It'll be like hitting the home, hitting the lotto with the S&Ps, even though it's a small amount that's, that carried over the weekend, but this is certainly a formation that one has to respect, period. Now, if we get a candle formation like this over the next couple of days, obviously this is a weekly chart, right? So like this, then you have to respect it. Now, when you start to get the next formation like that, or even close to it, please, the minute you start to see, it's quite simple. If you really want to be robotic, the minute you start to see on a weekly chart, if you really want to swing these things, a turn of the yellow line, which is the 5 moving average, the 5 SMA. And if somebody's not understanding what I'm saying, please ask me. You start to see a turn, stick with the trade. Because this baby, when it turns like this on a weekly chart, it stays like that for a bit. And of course, you got to monitor the internals. They need to keep on crossing over. You have to watch the McClellan, which move a lot faster. So the McClellans are more for, I use the McClellan oscillators primarily for extreme points. Okay, extreme psychological and inflection points in the market. So anyway, so that's what you need to do. Once you start to see this line turn, you stick with the trade. You don't need to really know much. Now look at the daily. Why do I do this? Because the high was 21.34 on the minis back on, does anyone remember when? It was May of last year. Then we had this big volatility move and then the crash. I have repeatedly said, and I'm just showing this in real time, this is what's going to happen right here. We're going to get somewhere around 1970 to 1980, and then we're going to do a retest again. So we're going to move like this, and I can't tell you how quickly it's going to happen. The way these machines are working can happen in a few hours. But once you get up towards these 1980 levels and start engaging, forget the numbers, start engaging the 34 moving average and stuff, because these are powerful downward sloping moving averages. These are prices 34 days aggregated and 50 days aggregated, right? Average. That's why they're called moving averages. So to get there, and then you're going to get a sharp move down. So don't start getting giddy here. Start getting giddy out down here to buy. Bargains are not called bargains because somebody marks them up 50%. But traders don't seem to quite understand that when it comes to the stock market. And it just befuddles me. And so I'm talking about smart traders. They don't get it. Yeah, that's what happens, you know. So that's it. So this is it's going to move. It's going to move sharp. You're going to go through a volatility cluster. And don't get phased out. You got to constantly keep on looking at the underlying. And of course, I keep on babysitting everyone and feeding all this stuff every day. So your primary objective should be to let me do the hard work of putting the charts together, and you just have to study them. But don't come to me and ask questions. You know, that really pisses me off when you haven't studied my work, because I put in a lot of effort during the day. When honestly, sometimes I don't even feel like being in the room, because I'm not obligated, by the way, to be in the chat room, just so you know that. My service is designed to give you those charts on the Twitter feed, produce an end of the day video cast, stuff like that. I don't need to be engaging with people on the thing. So if people are really starting to piss me off in the chat room because with their idiotic thing, when they're not looking at my work, I'm telling you guys right now, I'm not going to be there. And guess what? You guys are going to feel a little bit lonely. I'll tell you that. So I'm just saying this as with all due respect, that if you're not looking at my work and you're coming in and asking idiotic questions, as to, you know, whatever. Idiotic questions are not that you're an idiot. It's just that the market makes you, the market makes every one of us an idiot, right? So I'm going forward. I'm letting you know right now because I'm dealing with a lot of volatility here. So I'm creating these important charts, tactical trades I'm putting for people to make money. And you know, the guys who are getting in there, they are. Look at Tesla, went almost green. In fact, did go green net on Friday. Like 8 points off the bottom. And so many other things. So while I'm doing all that stuff, have some respect for me. Because I'm doing a lot of work on the background. And after that, if you come to me without studying my work, honestly, that's disrespectful. And I hope you guys understand that. So, and then again, I'm a hard nut, okay? In that respect. So if you do that, I'll just simply ask you to cancel and go away. Because I really don't care whether I have 3 members or whether I have 300. I want people to be somewhat focused and be respectful of what I do. And I hope all of you understand that clearly, loud and clear. So let's move on. So this is this volatility cluster will happen. It will happen here. Don't get phased out. I'll keep on, pointing out the salient facts. Given where we are with the markets and stuff, honestly speaking, day to day, there's a lot of moving parts going on, right? So I would say that don't take any type of very large positions. Doesn't matter, and don't right when you start to feel a little bit good. Let's say you're in a trade and stuff. Look at your P&L amount, depending on whatever you're trading, and depending on what the money is, take it, because it'll disappear in a flash, charts or no charts. Simple psychological rule about trading. If you start off your day with a positive net result on, let's say, your first trade, consequently your trades overall, if you manage them right, are going to be successful. Simple. Confidence breeds confidence. All right, and that's it. So so this pattern will repeat itself. I don't want to keep on repeating myself. 1 second. Let's take a look at away from toss. Now, some of you who have taken the plunge and really focused, and I really admire you guys of working on the algo HFT charts that I'm not going to cover tonight. I'm going to have an individual trading session for the people who are algo HFT guys this week. Okay, so we're going to go over a whole bunch of things that we covered on the first session. You can clearly see, what those charts are showing. But people are not left out, even if they're not subscribed to that service. I keep on putting those charts up, so you just have to look at it and understand it. They're very clear, and you can see it. Now, this is the one that's this is obviously the spies on the. Let me actually move away from this. Let's look at this for a minute here. All right, pretty clear. You got this is the spies on the freestockcharts.com or Warden. A little bit glaring and a little bit frozen, I believe, right now. Is it frozen? No, it's not frozen. Okay, so you got a triple bottom here. We think it's a triple bottom. We don't know. This is a 2-hour chart, so it's a 120-minute chart. First level of engagement, very simple, is right there. I have drawn some very important lines, these fan lines. So obviously there is that this one coincides with the 34. So somewhere around 1950, boom, they're going to sell the market again. Will it be all the way down here and lose another 400 points? I don't know. We'll see. But this is a level of major resistance around there, somewhere around here, between the uptrend support. I call them uptrend supports on these fan lines. And of course, on this side, we need to cross over. We need to cross over. 1 second. Right there. Actually, not right there. This was the last bottom. That's how I touched it. Right there. See? So we are right there. So we cross over. Bottom line is we are probably not going to move more than 240 to 300 points at a time. If somebody's dreaming about a 500-600 point rally in this type of market, there's going to be a lot of overhead supply. So not going to let it happen. We have a broad, powerful channel here, a very powerful channel. Okay, you can see this here, this one, which goes all the way back to when the market was traveling in a higher band between 2040 and 2100. If for some reason we have a massive move over a couple of days, which brings us directly back above into this channel, you're going to see there's these lines which are just waterfall decline, as I call it, right? These 50 and the 34, they are going to start to turn. Remember, just like anything in physics, you have to have a opposing force of equal or much higher magnitude in order to turn the ship around, also known as a breadth thrust. This is a very powerful declining line, signs of massive capitulative selling. These lines don't just turn around at a whim. They turn around because you get big, powerful moves. You get 2 days of 40-point moves on Amazon, or things like that. You know what I'm talking about. We've seen them a lot. So the point is that once you get this volatility cluster out of the way, you get these big, big moves. Now, simple stuff. When you get these big moves, what do? Let's say you're not in that trade and you're seeing this market do this. Do you sit there and go, "Oh man, missed it. I'll wait for a pullback." Well, I'm telling you, when the markets move like this, there are no pullbacks. And the pullbacks will come are short and sweet till the market reaches its predetermined level. And this chart alone shows what they are. The market goes to 2044. And people are like, holy shit, I don't believe this. Well, believe it. Because if the market is going to do this monumental one big move and it crosses over the 50 and the 34, it's not just going to stop and crash. It's all going to happen because of many different factors. Oil's going to stabilize, Iranians, all kinds of stuff, believe me. American companies are showing that, they're not falling apart. They're actually managing their finances much better than what most people thought, because that's what seems to happen all the time. And we need to have the chorus of the dogmatic bears continue. We need them being vile. We need them to be anti-Fed to the point where it's disgusting. We need like real bad stuff coming out. I sound like Trump here. So we need some really bad stuff coming out of the dogmatic bears. And they keep on getting pummeled. That's what the turn is. Not sure it's going to happen. I'm just letting you know. That's always the case. Now, when you get a move like this, and you keep on doing the same thing that you have done always, which is sit there and watch it, but fundamentally that could change your net worth to a small degree, depending on how much money you're trading with, then you know what? Cancel your subscription and never trade. Cannot keep on making the same mistakes. And believe me, I know. You cannot keep on making the same mistakes over and over again and still be in the game, because it takes such a mental toll in your heads. At one point, you just should be a crappy trader and a bad investor, because the market has damaged you. This volatility and everything that happens in the market is designed for one purpose. You think it's designed to make people feel good? It's designed to take mom and pop completely out of the game, and traders fry their brains. That's what it's designed to do. And in between that, the machines and these hedge funds which run it and institution firms which run it make a lot of money off your fried brains. How about that? So if you want your brain to be on normal pace, then for God's sakes, do what's necessary. You get these big breadth thrust moves and all the technicals pairing out. Yes, things get overbought. So what? They can stay overbought. We've been oversold for weeks now. So if you want to keep, I'm just really letting you know, because this is exactly what goes on. I know exactly what goes on through all of you, because I've done those things. I always try to keep one foot in the game. And if you keep on doing that, guys, honestly, it's disgusting. Now I really sound like Trump. Okay, it is really disgusting if you keep on making the same old stupid mistakes that you did, because these type of moves are such huge money makers, or pullbacks, mind you, are such money makers. But I'm talking about a retracement, a reflex bounce here, which is going to be violent. And we have seen bits and pieces of that during the week. Sharp moves up, and then, and then of course the sell-off. But why not catch that? You can catch the sell-off too. But be careful about trying to think that you're like some sort of shorting genius just because you did well on a bunch of trades. Doesn't mean you can't get tactical shorts. So what I'm getting at is, I repeat again, because this is very near and dear to me, okay? That if you see these powerful moves and you see these turns, and of course I'm there to show all this stuff, and you don't participate in it, I don't know what to say. You should be ashamed. All right, I'm serious. And I'm not talking about doing with big money. I don't care if you do it with just the token amounts, but be there to know what it feels like, but more importantly, to learn that how these markets work. And God help us if we see and this is not going to happen right away. This will take weeks because the damage has been severe. When you start to see these lines start to stabilize, because by the time they stabilize and turn, just the way they did here, okay, let's say it happens in February, let's say, then that's going to be huge. So that's it. So the charts that I put out are very precisely drawn. They're thought out and drawn. So all you have to do is spend some time really looking at them. This is the one from this is an hourly chart, which I call the traders, thing. So again, this was a channel I had drawn. Every time we got to the top of the channel, we fell. At this point, 190, it's right there. A lot of charts, by the way, are starting to look really wacko. So I'll stop talking and I'll answer a couple of quick questions because it's 8:43. What time did we start? We started around 7:30. So yeah, so we still have a couple of minutes. I'll give a couple of extra minutes. UVXY. Whoa, let me cover this. If things really hit the, really hit the, what, then UVXY is going to go to 60, and it's going to happen real fast, like here. So let's keep this in mind, okay? If things really go rotten, and some of these big companies reporting really say nasty stuff, then UVXY is going to so this is certainly on my radar, and you can always have a hedge in UVXY. What's the big deal? And again, with UVXY, you can do it with a couple of 100 shares, 100 shares, because this thing really moves fast, right? You can still make money. All right, VIX. This is certainly on the hourly at least. This is this is a massive spinning top naked bar, they call it. It's a reversal candle. If this bullish candle took out the reversal candle, we could have turned, but anything can happen these days. But this is generally on the hourly chart. We're looking at a short-term reprieve of the market. But the way this is drawn, the minute these are forward sloping. By the way, somebody's making a lot of noise. I don't know what they're doing. So what do you call they're forward sloping the 50 and the 34-day moving average. So once the VIX comes down towards 25 and stuff, which can happen very quickly, it's going to bounce from here again a little bit. And if it fails, then the next level of contact where you can basically buy the UVXY and the VIX is right here, the lower Bollinger, testing the downtrend line breakout around 20. So very simple rule of the thumb. Buy VIX at 20 and sell in 30 for now. And there is a little bit of backwardation going on. In other words, the forward-looking month VIX is actually slightly lower than where they are right now. So 20 VIX, you start to ease back on the markets. In other words, take your profits and start to go short. And not that it always works like that, but still, it's a good rule of the thumb. I don't think VIX sees 15. And so 20 to 30, 20 to 30, that's how the VIX is traveling in. All right. Can we see can we see levels if we go lower? Sure. 1 second here. Let's start off with S&P 500, and we go back all the way to the weekly. This is so the most logical level is this is a weekly chart. Keep an eye on the stows. This is telling you that the full sell-off ain't over. So this retest coming. After we bounce, we're going to retest again. And at that retest, we're going to come down lower. So I would say that the other low would be 1820 is one. Engaging the 200-day moving average on the weekly at 1790 to 1800, 1780 to 1800 would be a good bet for now. Remember, nothing goes down in a straight line. Most powerful bear markets have the most vicious rallies. And that's not just a cliche, it's a fact. Okay, so engaging the 200-day moving average would definitely be a pretty powerful pullback. So that would be it. But for now, I would say that we could test 1820, and of course we're at lower acceleration band, lower. Is that the lower acceleration band? Yes, the lower acceleration band at 1850. Those are good tactical lows you should be looking at. Okay. COT report is saying that we are going to hit 1700 on this low. I'll tell you something. That COT report, guys. Okay, and this is a commitment of traders they call it. Look at their track records over the first. Yeah, they nailed the first report down because they're talking about currencies. Have you seen that the speculation on the euro is actually bearish, and at the same time they are betting on the Japanese yen, basically appreciating. So the bottom line is that the COT report, I don't know. I can't answer that question. All I know is I'm looking for tactical bounces here, and if you're telling me that on this leg down to 1700 can be done after we bounce a little bit, so I don't live and breathe by the COT report, so can't really, you know what I'm saying. I look at that, but if you think the COT report is the Bible, then good luck, because they could be right, and they could be wrong. Yes, they did catch this part of the leg down, and that's fine. But it's good info, so definitely keep us definitely keep us posted. Any other quick questions from the silent majority who are listening to this? Good question, Jerry. Can anyone hear me?
Yeah, Clue, I got one question. I don't know if it's a dumb question, but like this chart's really laid out nice. It tells you all the colors of the graphs, which was the 5 average and the 50 moving, but one of your other one doesn't have that. Do you use the same colors on every graph?
Well, first of all, you have to look what platforms I'm using.
Right.
So I use 4 different platforms. I used freestockcharts.com. I use Thinkorswim. I use TradingView.com.
But I believe it was Thinkorswim didn't have the legend on it.
Oh, Thinkorswim.
Yeah.
Generally speaking, Thinkorswim. Yeah, I use the same thing. So let me pull up the Thinkorswim. 1 second. So here with here's Thinkorswim. These are the minis, for example, right? So you got the 34 here, you got the 50 here, you got this here as the 5 moving average, the yellow line, and then you got this Bollingers in gray, acceleration bands in blue. So all the lines are there, and these squarish boxes are obviously the Darvas box. So all of them are there.
Yeah, but all the colors are the same regardless of what chart you use, right?
I try to keep it that way. I try to keep it that way. Yeah. Sometimes with the backgrounds and stuff, the colors might look a little pale or whatever. But this is the 5. This is these 2 are the main ones. The red one and the slight orange one. I try to keep it the same, because even in TradingView, which has a white background, you can see here the colors are the same. See that? There you go. So yeah. So that's what it is. So questions? Jeremy, let me tell you something. Jeremy's writing some interesting stuff. This is the COT report. It's a whole different ball game, okay? This is commitment of traders. And believe me, their track record isn't that great. I'll tell you that. But if they're saying we bottom in April near 1415 to 1550, Jeremy, I suggest you sell everything you have and put everything in the market. You're talking about a monumental decline. This is exactly what I'm talking about, dogmatic bearish. Because if you look at the history of the COT report, they have never been bullish on the markets. Very seldom. Okay, very seldom. So if they're calling for 1500 on the S&P on a one-way train ticket, I have nothing to say. Okay, but this is a prime example of what I am. So you're basically saying we are going down to 1500 on a one-way train ticket without any tactical bounces or whatever. I don't buy that shit. Excuse me. So the point is, I'm not saying it can't go there. Anything can happen. We can have a global meltdown. We can have North Korea lob a hydrogen bomb to South Korea, and we drop 3,000 points on the Dow in one day. Anything can happen. But this is the prime example that I want to highlight. Okay, is no, he's saying no, we'll have a bounce before the third leg. Okay, but I'm just saying that this is a prime example that everyone has an ulterior motive. Because during times of stress and fatigue and frustration by traders and investors, what do you think? Good news sells? No, bad news sells. How many times did that the old guy comes over and tells and they keep on rerunning his commercials, at least on the Eastern Standard Time on CNBC, about buying gold, buying gold, buying gold, buying gold, buying gold. It's all mental brainwashing. So I'm not saying one or the other, but the reality of what I can see here is different. But what do I know? Okay, so the point is that if we have a global fallout, we can certainly get there, but nothing gets there like that fast. All right, and if you look back years and years of you know, of the market, even in 2008, 2009, it wasn't you know, like I said, it was still in staggered basis. So Jeremy, do me a favor. You're not trying to upset me because I don't have millions of dollars on the long side. So that's a dumb statement if I ever heard one. Not trying to upset you, just saying what it says. That's all. Nothing's upsetting me. I'm just stating my point. So please, I don't think you really know me as a person to think that I'm going to get upset. I'm just trying to clearly stress a point that during times of financial stress, the dogmatic bears, who the caught traders are, just so you know that, Jeremy, okay, look at their history, tend to really push on the pedal really hard. And there's nothing wrong with that. It takes all kinds to do it. But refrain from using the word upsetting me because I am not upset. Okay, just passing it on to you. I'm just stressing or explaining a whole bunch of other stuff. I hope that's clear with you. Thank you. Any other questions?
I got one other one. When
Sure.
you said earlier that you tend to clear your positions out at night just because of the volatility, do you tend to go in the morning after the market opens, or you buy stuff pre-market, or it just depends on the value you're getting?
I don't get into things pre-market that much, but if I'm starting to see some individual turns here and there, then yes, I certainly do. But I don't do too much stuff pre-market. Just to answer to your question.
Thank you.
Yeah, yeah. So, any other questions? We're good? Okay. So we're going to see, I think by now, by 9 o'clock, we're going to start to see a whole barrage of news and stuff coming out. So I'll keep on posting that stuff. But you guys are all great. And Jeremy, thanks for bringing all that, you know, stuff to the forefront because it's important for us to know. And certainly, you know, like I said, I just want, I'm a straight up guy and people who know me. And I just want to make it clear. This is, you know, opposing views on certain times is welcome. So that's not an issue whatsoever. So because it helps everyone to see the bigger picture. So bottom line is that I showed you what the short-term stuff is going to be. My charts are pretty much clear about what I think is going on. But in the meantime, I will tell you, do not rest on your laurels because this is a dangerous and very risky market given everything that's happened. And if you think that all of a sudden it's going to turn around and just, you know, be smiling and happy, don't. So always be in your toes. Lots of great opportunities to make money, both on the long and the short side. On the swing part, I believe that we have a little bit of time here to move up to those levels that I've shown before we drop again, or if we drop again, whatever the case may be, and we'll go from there. Okay, but that's it for now. So hope everyone has a great evening. I'll reconnect tomorrow. Futures are up about 11. I repeat again, really means nothing. But then at the same time, if futures open up 11 tomorrow and you have some SPX calls or SPYs or whatever on the long side and you're up nicely, don't look at a gift horse in the mouth. Take the profits, leave a couple of runners in there, go back, revisit the market. And if you start to see some technical changes, which I'll highlight, if the market just keeps on running, that's a different story. Okay, in that case, you can maybe swing out a little bit longer and go from there. But so that's it. So I'll see you guys all tomorrow, and thanks for listening.
Okay, thanks for your time.
Anytime.
Bye.
Yep.
Tomorrow.
Thank you.
Thanks, boss.